Hi, good morning. Welcome to your technical update on Friday, 28th of February 2014. Euro dollar on a daily graph. As you can see, we're a little bit unchanged this morning. After that drop on the 25th, we had something of a rally yesterday, but we did put in still a lower low and a lower high yesterday. Not much changed this morning. Janet Yellen's testimony yesterday, I suppose, was perceived by the market as a little bit more dovish, and therefore instead of seeing a strengthening dollar, we saw something of a slightly weaker dollar yesterday. So we'll see how it plays out. Euro dollar's not doing a whole lot this morning. I suppose it would really need to get down and eventually through this 135.61 so that we could get to this 134.76 and then the November base at 132.95. So it's still sideways consolidation. We're in the 37s, but we do have Janet Yellen's testimony over with. She did cause a decent rally in the S&P 500. What is, I suppose, a little bit of a dichotomy is that while we're getting these rallies in the S&P 500, the likes of Euro, Swiss franc are dropping. So we're seeing this morning now we're at 121.65 again, which is this fairly crucial support from November, and we seem to be back here again. So the Swiss franc is strengthening in a scenario where the S&P 500 is putting in these highs. So here's the 121.65 from December, excuse me, and now we're down here again. So we'll see what the Swiss National Bank thinks of this, but they would obviously be preferring if it went up into the 125s. They've got their peg at 120, and they'd rather see it go in that direction than heading back towards their peg. So we'll see how that plays out, but really we could easily see a push now down into the 120-125s being the low of this descending trend, and we'll see what the Swiss National Bank thinks of that. Dollar yen also strengthens and is strengthening a bit. So the yen is strengthening, so dollar yen is weakening. The yen is tending to benefit as well from this slightly risk-on environment in Forex. While again, as I said, the dichotomy is the S&P and the US equity markets are putting in new highs, so something has to give. But again, the yen is a bit stronger this morning, and we're down here now at 101.68. A break of the 174 would get us down to finally our 200 period simple moving average and the triangular support turn resistance, which we've been talking about forever, really. This is what it did for most of 2013 after the large move up in 2012, and we broke to the upside after the tapering process began, and we're looking to get down now into the 200 period moving average for another in order to get long, to take advantage of this fairly aggressive bullish trend for our 110 to 112 target. The other thing I'm watching this morning is Kiwi US dollar. Kiwi is a commodity currency, and I've been expecting it to weaken. It's not done so. It's strengthening a bit, and I find that a little bit puzzling. I do think it's going to get fairly well offered up at these levels, but time will tell, I guess. But I'll get it down to a daily time frame for you. We're at 84.02 this morning now. Really, we're just in the range, aren't we? We're just at the upper end of this range, and really up at the upper end of the Bollinger Band. But on an hourly time frame, we were at least at 1 and 2 a.m. this morning overbought. And so here we were at 1 or 2 a.m. this morning. So I'd like the idea of fading this move, but only if I see it break down on an hourly time frame. Otherwise, on an hourly time frame, the trend is still up. But I would like to see it maybe break down below this 83.80, and that might be an interesting move for a fading on a sort of a daily time frame, but using an hourly time frame to get yourself short. So we won't sell this until we see it dropping. But anyway, look, that is it. This is Friday, so have a good weekend. Be careful out there today. We did have Janet Yellen yesterday, but let's just see if we can get some decent price action again today. We got something useful yesterday. That is it, and I'll talk to you next week.